All right, Board of Directors, welcome. This is your financial explainer for April 2025. Let's get right to it. So, first things first, just a quick but really important note on how these numbers are put together for the sample association. We track income as soon as it's billed. And for expenses, we're on an accrual basis. That just means we record costs when they happen, not necessarily when the check goes out. And, to keep things consistent, if we haven't gotten a bill for a contracted service, we'll just pop in the budgeted amount. That way, we always have a solid picture month to month. Okay, let's get right to the big number, the one everyone wants to see. As at the end of April, you're looking at a year-to-date net income of over $207,000. I mean, that is a fantastic result. Honestly, if you take away just one thing about our operating performance this year, it's this. It puts the association in a really, really strong financial position. So with that amazing operating results as our backdrop, let's shift gears a little bit and look at our long-term financial health. First up, we're going to take a quick snapshot of where your reserve funds stand. Okay, so the latest reserve study says we should ideally have about $5.25 million set aside. Right now, our current balance is sitting at just over $1.56 million. So what does that mean when you put those two numbers together? Well, in simple terms, the association's reserves are currently 29.7% funded against that recommended level. This one number, it really gives us a crystal clear snapshot of where we are with our long-term capital planning. All right, next up, let's check out the association's core financial position. We'll just hit the highlights from the balance sheet. So the balance sheet, it's like a financial photo of us taken on April 30th. You can see our total assets are sitting really strong at $3.6 million. Now, on the other side of the coin, our current liabilities are only about $134,000. So when you factor everything in, like prepaid assessments, what does that leave us with? Well, it leaves us with about $414,000 in net available operating cash. And that right there is a really healthy cushion for all our day-to-day stuff. Okay, so we know the big picture looks pretty solid, right? But the real question is, how are we doing compared to the plan we set out? To answer that, we've got to dig into our year-to-date budget variances. And when you look at the big picture on expenses, this chart tells a really great story. Year to date, our actual spending is just over $1 million. But look, we budgeted for $1.2 million. That's a huge difference. That favorable variance, almost $200,000, is what's really driving that awesome net income number we talked about at the beginning. Now, even though the overall performance is fantastic, it's always important to drill down and see which specific areas are trending a little hot, over budget. Gas service is the big one here, running almost $12,000 over what we planned so far this year. And you can also see that tax expense and storm drain cleaning have some notable variances that we definitely need to keep an eye on. So you can see how this works in the real world. Let's just take lighting maintenance as an example. It's over budget by about $2,500. So why is that? Well, the financial notes tell us the whole story. It was because of some light repairs back in February, and then that excavation and ground vault installation we had to do in March. It's a perfect example of how specific and totally necessary projects can show up right here in the numbers. Okay, let's move beyond just the budget numbers for a second. The financial notes. This is where you get some really crucial context for what's happening on the ground. Let's touch on a few key items. First up, and this is just a key point for the board to be aware of, the balance in our operating account is a little over $300,000. That's more than the standard $250,000 FDIC insurance limit. Just something to note. Second, you'll see we're reflecting the change in the maintenance contract that you all approved. That's where we reallocated funds after we replaced a full-time employee with an associate. And finally, as of the end of April, the prepaid assessments balance is sitting at over $103,000. All right, we're coming to the end of this month's financial explainer. Let's just wrap things up with a few concluding points. So it's really important to remember what these are. There are interim monthly financial statements. You, the board of directors, are the ones who review and approve them. And of course, everything is subject to that big annual review by an independent CPA, someone who's not connected to the management company or the association at all. And that brings us to one final thought, something to really chew on. we've got this really strong year-to-date operating surplus. So that poses a great strategic question for all of you on the board. What opportunities should we be prioritizing with this surplus for the rest of the fiscal year? Definitely something to think about. Thank you.